What types of insurance does a home service-based contractor need? Is it general liability only? What about workman's compensation insurance? What in the heck is umbrella insurance? These are questions I see quite a lot online. So today we've brought in Blake Wigson, who's the VP of Commercial Lines for PJC Insurance here in Springfield, Missouri, to answer these questions and more. But before we jump into the interview, if you find this content helpful, educational, heck, even entertaining, why don't you go ahead and give it a like? And if you're new here, consider subscribing. When you do subscribe, please remember to hit the notification bell so that YouTube lets you know each and every week when we have new content available. With all that being said, let's jump straight into the interview. Well, guys, those of you just joined us, appreciate you coming in. We're talking with Blake with PJC Insurance about business insurance, but also, business insurance, but I'd like to talk about two different perspectives, from the contractor's perspective, but also from the homeowner's perspective. Those of you just joined in, what we're going to talk about is specific to Missouri within the United States. But if you're not in Missouri, if you're not in the United States, it still give you a pretty good overview on what you should be asking your agent about. So, Blake, let's talk about just kind of the broad strokes of like a commercial insurance.
Okay.
So a lot of guys will say they're fully insured, but fully insured means a lot of different things to a lot of different people.
Is that
right?
Very correct. Very correct.
So I think the big one that we should talk about to start off with is probably workers' compensation.
Correct.
It's a piece of insurance that is incredibly valuable, even if you don't use it.
Correct.
But especially if you need it.
That's right. That's right.
So let's talk about overview. What is workers' compensation?
Okay, workers' compensation is for your employees that get hurt on the job site or doing work in the scope of your business. Okay, so in the state of Missouri, if you have 5 employees or more, it's a state law that you have work comp. But if you're a contractor, it's 1 employee. So that's different for the contractor side of things.
Yeah.
So a lot of people don't see that and they say, oh, it's 5 employees. But if you're a contractor, it's technically 1.
Gotcha.
So that's the big thing there. If, say, Joe, you're working for me and you get hurt, work comp's going to cover you fully medical. So it's going to cover full medical for you. And then if you lost time, it's going to be 66 2/3 of your weekly pay. So so you will get some income off it as well. One big question I get from a lot of guys that are just individuals is, why am I included on work comp? I don't see any benefits from this.
Sure.
Well, actually, you do. Even as the owner, you still get full medical and get loss of wages if you are out more than 3 days. It's 66 2/3 of loss of wages. So,
well, yeah, because even no matter how big of a company you have, the owner still finds themselves putting on the tool belt from time to time.
Correct.
And it would be my luck that if I were excluded and I didn't have any coverage or anything like that, that's when I would get hurt.
Correct.
And then let's talk about for a second that the owner is quite possibly the most valuable employee to the company. They don't call in sick. They probably give more than 100% pretty consistently, and they make the wheels go round.
That's right.
And so, we want to make sure myself as an owner that I'm covered, so that if I do go down, that I'm supported and I get help through that.
Correct. Another topic that you and I talked about earlier today, was subcontractors.
Yeah.
If you're hiring subs, you got to make sure that they have their own insurance. They need to have their general liability. They need to have your workers' compensation. If we hired a sub and he gets hurt on my job, he comes back to me and says, hey, I got hurt on your job, I am responsible for his injury. And so that's when work comp come in. And that's what a lot of guys don't understand. They said, well, I'm 1099 him. He's not an employee.
Sure.
But you're telling that 1099 what to do on the job.
Yeah.
And that's another thing is make sure that when you are doing the subs and you want to make sure that they have their own insurance, is if they don't, if they work for you one day, work for me the next, and they get hurt on my job, they come to me and say, hey, I got hurt on the job. And I said, I'm sorry, I don't have work comp. They go to you and say, hey, I got hurt on your job. Oh, I have work comp, I'll turn it in. So they're going to find out a way to get it covered.
Yeah.
So that's why we always say, anyone that does work for you, make sure they have certificate of insurance and it's on file.
Yeah.
And because you know how it is, audits at the end of the year.
Yep.
They ask for them. Hey, so Joe was a contractor for you. Where's his certificate of insurance?
Sure.
You know, so
Well, because insurance in general is just covering the liability, right? Is trying to make sure that if there is liability, that it's insured, that it's covered.
Correct.
And so that's really what the auditor's position is to make sure, hey, was there any liabilities out there that we don't know about?
Correct.
And if so, we need to cover those.
That's right. And we need to charge for that.
Sure.
And see,
Yeah.
that's where you get to these big audits is, you know, my sub, I paid him $50,000 over the year and he had no coverage. And then audit time comes and I only predicted 50,000 on payroll. So it doubled my payroll. So then
Yeah.
I have a big audit because they're going to collect premium on that exposure they had that
Sure.
year.
Well, yeah, because they've had that exposure all year long.
Correct.
And so, yeah, so it'll be a big check to write that day.
That's right.
But really, the thing to think about is actually that's a year's worth of coverage.
That's
You just
right.
have to pay it all in one day.
That's right. That's right. That's right.
So, so that brings up a good point in that because you brought up payroll, and so that's generally how workman's compensation is calculated. Is that
Correct.
right? Based on
Correct.
payroll.
Yeah, so you're class coded for the operations that you're involved in. You know, you got a fence class code, you have a shop class code,
Yep.
You have clerical class code.
Yep.
And that's just some of that Joe's are in, you know.
Sure.
So every industry is different. So
Sure.
you got to be class coded correctly.
Yeah.
And it's always based off of payroll. You know,
Okay.
your clerical rate, which people that are doing office work,
Sure.
is going to be a lot cheaper than me going out and doing fence installation, just because
Right.
the exposure there.
There's
you know,
less
the-
chance of a costly injury.
Correct. You know, the roofing industry, that's one of the highest
Yeah.
class codes out there right now because you get hurt on a roof, it's going to hurt.
Yeah,
You know,
yeah.
You're going to fall off the roof and get seriously injured. So that's why these roofing workers' compensation policies rates are so high.
Just because the risk is so high, and
Right.
So in our business we have the clerical code,
Mhm.
we have the fence installation, we have shop, we also have outside sales.
Yep.
That way, because again, an outside sales risk is different than an installer's risk or a clerical risk.
Correct.
And again, we have a shop code that way because those guys aren't seeing the same risk either.
Correct.
So it'd probably be really important to sit down when you are talking about your workers' compensation policy and making sure that your agent understands what roles and what tasks
Correct.
your workers perform.
Yeah, and that's the one thing that we ask as agents, just be upfront. Exactly. You know, I go through and say, okay, give me a list of employees. What does he do on a day-to-day basis? What does she do on a day-to-day basis? That gives us an idea. Hey, their payroll needs to go into this class code. His payroll needs to go. Hers needs to go here. You know, so you can break it up that way,
Sure.
and that can save you premium wise too.
Yeah.
Because if you lump it all into fence contracting, and half of your employees are doing, you know, outside sales or clerical, it's a whole better rate.
Yeah.
So it's costing you money when
Absolutely.
it comes to audit times.
Gotcha. And one thing too to mention too, Blake, is that once you put an employee in that class code, they aren't locked into that class
Correct.
code. Is that right?
Correct.
So
And
if I
that
had
changes.
If I had an employee that was part-time on the fence crew and part-time in the shop, I need to track his hours for each.
Correct. You need to make sure the documentation's there.
Sure.
And it says, hey, from this time to this time, I paid him this, and they were in the office.
Yeah.
This time, he's out installing fence.
Yeah.
Because otherwise, if it's not documented correctly, it will go to the higher class code.
Yeah. You have to be able to produce documentation that says, they clocked out of their fence crew at this time, they clocked into the shop on this time, and that's how the hours were split. Very good. Very good. So workers' compensation, now does any agent have access to a workers'
Correct.
compensation
Correct.
policy?
Yep. So majority of your agents should have it.
Okay.
I mean, I would say 100% do.
Sure.
Then again, there's different markets for it too. So
Yeah.
some may have one market, some may have a variety of markets.
Okay.
And it all determines on the operation as well.
Sure.
You know, the higher risk class codes, not as many markets are a player in those fields. So
Yeah.
that's something you have to see too.
Understood. Very good. All right. So we talked about workers' compensation. Let's talk about just like general commercial insurance for a minute. So like a general liability policy.
Yeah, your general liability is property damage or personal injury to others. So you're out on a job site, you're digging fence poles,
Yeah.
and you hit wires and you damage wires.
Okay.
And that's a good thing about you guys. You do dig right.
Sure.
So if dig right wasn't called, and you guys were responsible for digging without calling Dig Right.
Yeah.
And you damaged, say, the AT&T wires.
Yep.
How do you think AT&T is going to get that bill?
Yeah, yeah. You get a
it's
bill
not
for
pretty.
it.
It's not pretty.
No, no.
So that's when your general liability will kick in
Sure.
and do the damage for the property. Say that you have extension wire out, or you're
Okay.
running something. And
Yeah.
An elderly individual homeowner comes out, steps, and doesn't see the cord.
Okay.
You know, trips and falls and gets hurt. She's going to say you're liable because you put that extension
your
cord.
cord.
There. That's right. So that will protect you for bodily injury to others. That's where that
Okay.
comes in. Now, it does not protect your employees. That's where it comes.
Sure,
But,
yeah.
But other people's property and bodily injury. So.
Understood. And so that's really an important piece of insurance, even if the contractor, say, doesn't have a permanent place of business.
Correct.
They would still want
Correct.
general liability.
Yep. Yeah, and it also, the general liability protects your premise too. So,
Sure.
your yard, someone comes in, trips and falls, you're taking care of general liability. If you're out on their job site and something happens and you're liable, you're protected as well.
Yeah, and the reason I wanted to bring up the contractors without say a office or a yard is because that seems to be a point of confusion as to, well, I don't have a physical location, so I don't really need this piece of insurance, but you absolutely do.
Correct.
Like-
And just going into other coverages, you got your inland marine, also known as equipment floater.
Okay.
So equipment floater will cover your tools in transit, at the job site, stuff like that. Where your business personal property covers your property at the location, at
Okay.
your primary location that's
Okay.
listed. So, if I have just business personal property and I take $5,000 worth of tools in my truck each day to a job site,
Sure.
and I get in an accident, those tools won't be covered because they
Okay.
aren't there at the location. That's why we got to list them for the ones that are in transit. You make sure you got it listed on the policy there.
And that's why every year when we're doing our policy, we're talking about, is there any new equipment purchases? Or have there been any equipment sales? Understood.
Yep.
Understood.
Yep.
We want to make sure that we cover the equipment as well.
Correct. And that policy also does rented equipment. I know sometimes you rent some equipment.
Yep.
And you can add rented equipment onto that equipment floater, and it'll cover that so you don't have to buy it at the rental business every time.
Very good.
And that's the thing that a lot of people didn't know that.
Yeah.
And it saves them money over the year.
Saves us quite a bit of money.
Yeah, just to put it onto your equipment floater policy. It says rented equipment up to 100,000, so you can rent equipment up to 100,000 all year long and not have to pay it from that.
Well, that's good to know.
Yep.
That could save you quite a bit of money
Yep.
just in and of itself.
Yep.
So let's talk about the vehicles, because we talked about inland marine covers the tools that are in the vehicle. But say, so we have fleet vehicles,
Mhm.
but say if I was a one-man shop and I was just using my personal truck, I would obviously have personal insurance, but if I'm using it for commercial purposes, I would probably want commercial policy on that vehicle. Is that
Correct.
right?
Correct. That's something that you need to talk to your agent. Now, some personal lines policies have a little business use
Okay.
endorsement onto that policy.
Sure.
But if it's strictly your day-to-day operations is fencing
Yeah.
and you're driving that truck to fencing jobs, you need to have a commercial auto policy.
Gotcha.
And one thing that we preach on the commercial auto policy side is make sure that the vehicle is titled in the business name.
Okay.
So we'll use Joe as an example.
Yeah, you bet.
Joe's driving a truck and it's titled in Ozark Fence, and Ozark Fence policy protects his vehicle.
Sure.
If it was titled in Joe Everest and we're insuring it under Ozark Fence, he gets in an accident, a good attorney is going to go back against Joe
Yeah.
because he's the title holder and Ozark Fence. So it's just
Oh, no
having
kidding.
that liability out there that you don't want.
Sure.
So that's why it's always a good thing to make sure that the vehicles are titled and how they're insured. So if they're
Good.
insured personally, they need to be in your personal name.
Yeah.
If they're insured commercially, they need to be titled in the business.
And it really is going to depend on what they're used for.
Correct.
So if I had a personal vehicle that I only use once in a while, that would be different than a truck that I drive to work every day and use for work every day.
Correct. Exactly.
Understood.
And then, another thing is make sure on your commercial auto policies you have hired and non-owned. So that will help you, if you go and lease a vehicle, say yours broke down, you need a vehicle, you have the liability already covered under your policy, so you don't need to purchase from Enterprise or whoever you rent it from.
Sure.
But also it covers, say, Joe, you have an employee that runs an errand for you. Say he runs up to Ace Hardware to pick up a product for you.
Yeah.
And he gets in an accident in his personal vehicle.
Okay.
His personal insurance will be first, primary. But an attorney says, oh, he's running business for Ozark Fence. They're going to come back and sue Ozark Fence. And that's when the non-owned liability kicks in and protects Ozark Fence from a lawsuit.
Understood. So that's good to think about because, I mean, we've all been there where we need something real quick, like I said, from the hardware store. And, you know, one of the guys says, well, I'll just go jump in the car and I'll be right back.
Yep, exactly.
So that, okay.
Now, not always is the business brought into a suit like that, but
No.
we've seen it, and that's why it's on there.
Well, you know, and it's one of those things to where it's like a lot of insurance. It's better to have it, not need it, than need it, not have it.
That's right.
Because one of those ways is going to be incredibly expensive.
That's right.
Yeah, it never fails. It never does. So we've talked about automobile. We've talked about workman's comp and 1099s, how those related. Let's talk about on the commercial side. So say like the bidding side.
Okay.
So because a lot of guys think, well, I have insurance for just my general business operations.
Mm-hmm.
But there's actually insurance that comes into play when you're doing like a bidding process.
Right.
More so for like public organizations.
Yeah.
You know, for cities and counties. But you see it. You know, we see it sometimes on larger private projects too,
right.
and that's bid bonds.
Yep.
Can you just describe, you know, generally what a bid bond is?
Yeah. So basically, a bid bond's based off of the scope of the work of that job, and the limit of the bid bond is normally the bid of the job that you're going to present.
Okay.
So if you have a $250,000 bond, normally your scope of the work for that job was $250,000. That's what you're going to charge them.
Sure.
Okay. So it covers that. The bid bond is the start of the bid process. So you obtain a bid bond, and then you turn in your bid to the organization, and they review it. A bid bond will basically say Ozark Fence is financially stable. They can be bonded for your job.
Okay.
For this amount. Okay. And then once you're awarded the job, that bid bond turns into a performance bond.
Okay.
Okay. So then a performance bond basically guarantees the work for that contract in a timely fashion. So if you're doing work on a job, it's supposed to take 6 months and it's down to 10 months and they haven't changed anything on the original contract, and you're not showing up, you know, that city or whoever you did the bond for is going to come back and collect on that bond amount.
Sure.
And so
because they're going to have to hire a contractor to perform the work.
Correct. They got to finish the job.
Right.
So they're going to collect that money and then go hire someone else to do the job.
Sure.
And a bid bond and a performance bond, they all go together.
Okay.
And it's a bonding. And the thing about it is it's all credit based or financial based. So a lot of these carriers will do the smaller bonds on credit based, just off of the owners and business credit.
Sure.
The larger bonds, normally you have to turn in your financial statements and show, you know, you have assets and making money. And,
and
a lot of it is, like we talked about earlier, is off of your experience. You know, if you've done several jobs at $200,000 jobs, a bond market is going to be more liable to give you a bid bond than someone that their highest job is $50,000.
Yeah. Yeah, because really what they're trying to gauge, I mean, they don't know the business.
Correct.
So they're trying to get some sort of idea on what are the chances that this contractor is going to perform the work in a timely manner.
Correct.
So if we have one contractor that consistently performs $200,000 projects, he's wanting a bid bond for a $100,000 project. Well, that seems he's very likely to complete it. On the flip side, if it's a contractor that, you know, consistently performs $20,000, $30,000 projects, but they're asking for a $200,000 bid bond, and they might not be as likely to be able to perform the work completely on schedule.
Correct. You know, they're stretching their neck out for you to get the job done, and it's basically a banking process.
Sure.
So it does take some time, but once you get in with an agent and if you're getting bonded quite a bit, you know, you can be pre-approved bonds. And it's all based off of financials and credit again.
Sure.
And you know, I can say, hey, Joe, your bonded amount is $1 million. So any jobs under that, you're already approved for.
Gotcha.
You know? So that's nice to have.
Yeah.
You know, a lot of contractors are starting to see that it's more, the contracts are requiring it more often.
Sure.
So we go ahead and get them approved for the year so that they don't have to do it every time that they get them on.
That makes sense.
You know, but if you aren't seeing the bonds and you only do it once or twice a year, then it's likely you can just go and get it for that time.
Sure. Now, the bonds themselves are based on what your bid is going to be.
Correct.
Right.
Correct.
So are they priced differently depending on how big the project is?
Correct. Yes, that and basically your credit and financials.
Sure.
You know, you
sure.
can get better rates if you have a good credit, and better financials. And
Now, say if I were to call you, Blake, and say, "Hey, I'm bidding this project. It's $100,000." You obviously already know our business, and we've talked about bonds before. You would be able to give me a decent idea of how much that bond would be for cost.
Yeah.
So that way I could. And what I'm getting at is that way I can reach out to my agent. I know about what that costs. That way I can roll it into the proposal.
Correct. Yeah, and that's the main thing is always reach out to your insurance agent before you turn in that bid.
Yeah.
So then you can cushion that bid to cover that bond expense.
Yeah.
That is an expense for that job.
Correct.
So
yeah.
you need to cover your expenses for that job. So just go ahead and call your agent in advance, get it pre-approved. He can tell you what the price is going to be, and then you can put it in your bid to make sure that it's covered and it's not coming out of your profit.
Well, that's right. And we talk about that sometimes on the channel, is that making sure that as a contractor that you're not shortchanging yourself.
Right.
You know, and through you, your family.
Yep.
You know, and so that's one of those costs that you might not think about until you turn in your bid, and then they ask, well, where's your bid bond? And then you have to go get it and secure it. Well, you're going to have to pay for it. Correct. So now all of a sudden, you know, the project that you're using it for specifically, it's not bidding that project. So now that money comes from somewhere else.
Yep.
So bid bonds are incredibly important. But there's something typically your agent that you already have a relationship with can handle for you.
Correct. Yep. And that's normally, you know, most of our contractors come through us for the bonds. We have an individual in our office that handles majority of the bonds because she does it day in and day out. Yeah. So she knows all the process. Each process is a little different depending on which market you go to.
Sure.
Pricing is different based off of financials and credits.
Yeah.
But if you can get it pre-approved and already know your rate for the bond, that's a huge advantage for you. So you don't have to wait for your agent to get that for you.
Sure.
You just put it in with your bid, submit it, and hopefully you win the job.
There you go. Very good. All right. So one thing we didn't touch on the workman's comp that I think we should talk about is the EMOD. Yep. So each year I get a letter from Missouri Workman's Compensation that says
NCCI.
Yep. That says your EMOD is point something.
Yep.
And I never know what that means. And I say, "Hey Blake," and you say, "Yeah, I already know."
Yep. So NCCI generates the EMOD for you guys, and it's all based off of your history.
Okay.
So it goes back 3 years. That's how they develop it. A new business starts at a 1.
Okay.
And so if you don't have claims, you have good years, you go below a 1. You know, you can go down to 0.8. So that's a 20% discount that you're getting on work comp if you have a 0.8 EMOD.
Sure.
If it's above a 1, you're credited that. So,
okay.
you know, if it's a 1.2, you're paying 20% more than what the standard would because of your loss experience. So,
sure.
You know, and they all go off of severity and frequency of claims.
Okay.
So, you know, one big claim will hurt you just like 3 small claims.
Gotcha.
So that's the one thing that we always make sure in your employee handbook, you got the safety protocols in your employee handbook, protect you the best you can. Accidents are going to happen.
Yeah.
You know, and that's what insurance is for. You
right.
know,
right.
So you're going to have that, and that's going to be based off your EMOD. So if you have one bad claim, it's going to stay with you for 3 years, and then the following year it'll fall off.
Gotcha.
And then once it falls off, your EMOD will drop significantly, and you'll start getting the discounts again.
Sure. And so that's really important to determining how much you'll pay on a yearly basis for workman's comp.
Correct.
Is severity. So has there been one big claim, or have there been multiple smaller claims?
Yep. And you know, and another thing is you see the Monday injuries. So that's when we see a lot of claims come in. It's a Monday after the weekend.
Yep.
They get hurt on the weekend. So when that does happen, you know, always note to your agent, say, "Hey, please advise this market that we have. I don't know who you have on your work comp, but whoever we have, that, hey, I think this is a little suspicious. You know, I saw him playing softball over the weekend, and he's coming in limping Monday morning, and he said he got hurt.
On
Friday at my job site.
Yeah.
So that's something to always let your agent know so he can address that with the adjuster
Sure.
that handles the claim. You know, as you turn in a claim, you get an adjuster, and that adjuster will do that claim. And those adjusters are specific for, you know, a work comp or general liability or property, whatever you have. So they're well known on that. And if it's something suspicious and they say, hey, yeah, we can look into this, and they do it. And for instance, say someone says, hey, my back hurts, I can't come to work. And they go out and do a little surveillance on him, and he's out mowing the yard and weed eating at his house.
Sure.
And they get pictures of it, you know, they can deny the claim. So it's always something that let your agent know, say, hey, I don't know if it really did happen at our job. And that's what Joe's so good about. He's got an incident report every day. So if someone gets hurt, you know, it's reported and there's a witness, and he marks it, dots his I's and crosses his T's. Right?
Well, you try to as much as possible. Yeah. So our process is at the end of every day, the crew chief, the supervisor, will ask, are there any injuries to report? Did anyone get hurt that I don't know about? I mean, obviously, we ask that, you know, immediately after the injury, it gets reported.
Correct.
But at the end of every day, there's always a question. Did anybody get hurt that didn't let me know?
Yep.
That way, it's us trying to give them every opportunity to say that they did, so that in that scenario, when Monday they say their back hurts, so, well, now wait a minute, Friday, you know, Scott asked everyone if there was any injuries, and you didn't report the injury.
Correct.
You know, so it kind of gives us one more step to just try to make sure that everyone's on the same playing field.
Correct. You know, and you being upfront about it, being involved, will save you in the long run. Premiums on the work comp.
Yeah, that's absolutely right. Well, Blake, so there's a few more things I'd like to talk about. So we've talked about kind of the key insurance, right? The kind of the main piece of insurance, but there's a lot of minor or minutia pieces of insurance too that often go overlooked.
Correct.
You know, so let's talk a little bit about your words, not mine. EPLI.
Yeah. So employment practices liability.
Okay.
So basically, it's wrongful termination, discrimination charges that come up against you as an employee. You know, with today's world, with the COVID-19 and all the layoffs and people needing money, this is one of the hottest claims that we're seeing right now is, hey, he discriminated against me, or he terminated me wrongfully, and I'm suing him.
Sure.
And without this coverage, you don't have coverage. So it's employment practices liability. So just reach out to your agent, and they should know it. It's all based off of how many employees you have, what type of operation your turnover, you know, stuff like that.
Yeah.
If you have, you know, a lot of businesses have long-time employees and turnovers are good, and but then you have the industries that have a lot of turnover. You know, contracting is one of them. You know, when it comes hot summer days and cold winter days, you know, a lot of people don't want to work. So they find a reason to get that money to stay at home. So employment practice liability is a huge topic right now in the insurance world, especially with the COVID going on. So that's something that you need to reach out to your agent and just advise them, say, hey, do we have employment practice liability? If I don't, get a quote and see if it fits you. I mean, it's not the cheapest. It used to be. But now with all the claims that we're having, the rates are going up on it.
That makes sense.
But it protects you on something.
Gotcha. So, so you could have crossed all your T's and dotted all your I's, and still something comes up. You know, a claim still comes up, and so this would kind of be an additional barrier or additional support for you.
Correct.
Gotcha. So let's talk about one thing that you and I talked about several years ago that I hadn't really thought about was cyber insurance. I mean, everything's going online, you know, and as our company's developing and growing, we're using more and more technology to try to scale and give the best customer service we can, such and so forth. So, but you know, there is insurance that covers that side of the business too.
Correct.
Is that right?
Yep. There's cyber policies, and they vary depending on the operations, of course. That's a good thing. You know, everyone's seen the Target hacks and all that. Think of all the people they hire just to protect them from their hacks and getting into their system. So the low hanging fruit are these small business owners.
Yeah, yeah.
You know, they don't have the people that are employed to watch their malware and
Yep.
Firewalls and all that. So that's something that we're seeing in this industry as well as being hot as, you know, they attack and they get to your data compromise, the coverage there. So they hack into the system and pull, you know, personal identifications, credit card numbers.
Yep.
And then they hold you liable for it until you get it recovered.
Yeah,
So,
or they can just lock up your system.
correct.
They can shut your system down and say, we need X dollars to, you know, get you back up and running.
Yeah, and we're seeing it. You know, you see it on the national news as well. And you know, Bitcoin. A lot of people are hacking systems and holding it for ransom and say, "Hey, you owe us 10,000 in bitcoins before we release it back to you." Well, and they're doing that. So this cyber coverage definitely protects you. You need to ask your agent because there's going to be variance on what your operations are and your exposure. You know, some people have third party where they say, Blake, I don't collect any personal information. It all goes through a third party. My third party has that all covered, so I'm not liable for it. Well, if that's the case, you know, there still could be some potential, so you can have a lower limit and feel comfortable with it.
Okay.
You know, if you're storing everyone's, you know, social securities, credit cards in your system, which hopefully you aren't. But if you are, you know, you can get coverage for that.
Sure. But I would hope that most contractors that are listening to us have a CRM that at minimum has names, addresses, and cell phone numbers.
Yep.
And those are personal information.
Correct.
So the cyber policy is definitely going to vary depending on your operation and how you operate, that sort of thing. So definitely talk to your agent, but it is something that you certainly need to ask about. So let's talk about this. So we've talked about the big policy items, the smaller policy items. Let's talk about umbrella, which to my understanding kind of covers all of that. Is that right?
Correct. So you have your underlying limits, your umbrella floats above it. So as your underlying limits get exhausted, that umbrella will come down and kick in. And it also will sometimes come and protect you for if something fell through the crack. If the underlying limits don't protect it, and the umbrella will come in and kick in and protect you. So, you know, that's a one thing that we always say is we suggest umbrella policies, even on your personal policies. You know, they're inexpensive for the coverage that you get, and it just gives you extra coverages in place that if you do exhaust your limits on the underlying, that kicks in and protects you for additional coverage.
Sure. So it's an additional layer of coverage for things that you do have covered or things that you may not have covered. So it's kind of a final line of defense.
That's right.
Very good. So Blake, I think that kind of is a pretty comprehensive look at business insurance.
Yeah.
Would you say?
Yeah, you know, it's pretty general, and that's why, you know, like we said, is talk to your agent. Be upfront with them. Don't be hiding anything from them. If you're doing flat work concrete and you also do foundations, you need to know that because there's two different exposures, you know. So
well, and that's a good thing to talk about too. Is so say, you know, we are doing something with a higher exposure, and one of our guys gets hurt, or we damage some property doing a higher risk exposure. That would probably have some pretty negative consequences, wouldn't it?
That's right. Yeah, majority of the time they're going to be covered.
Sure.
But then when it comes up for renewal, you're going to have to go find you a new place.
Sure.
So if you weren't being upfront with your agent and your agent wasn't upfront with the carrier, then they're going to say, we'll see.
Yeah, the carrier say, I recognize that name.
That's right.
We're not gonna do this twice.
That's right. Then when you go to another carrier, they're going to see a loss on your policy and ask you what you're doing. So
gotcha.
Sometimes it's best not to take those one-off jobs that you aren't really insured for, just to protect you and your business.
Blake, like I said, I appreciate it. If someone's watching this and wanted to reach out to you, how would they do that?
You can email me at bwixon. Our names are on there. So bwixon at PJC, so Peter Jack Charlie, insurance.com. And I can answer any questions that you guys have, or you can call us at the office. It's 417-833-3800.
Very good. Blake, like I said, I appreciate you coming on the show. I appreciate you being a great agent for me and my business. You and I have known each other for quite a long time.
Yeah, we go way back.
And I really appreciate that.
Thank you.
Very good.
Appreciate you.
Well, guys, I appreciate you guys for sticking around, watching the live view, and interacting with us. If you do have any questions after this broadcast is ended, drop them in the comments below. I'll keep an eye on it. If it's an insurance related question, I'll probably forward it to Blake. But leave your comments or leave your questions in the comments below. Again, if you found this live broadcast enjoyable, helpful, or heck, even entertaining, consider giving it a like. If you're new here, we'd ask you to also consider subscribing. If you do subscribe, hit the notification bell so that you get notified each and every week when we have new content available. But for now, I'm Joe Everest, the fence expert, here with Blake, the insurance expert, wishing you a great day.